The founder of Fairfax Financial is Prem Watsa, an Indian-Canadian billionaire businessman, and his success story was reflected in a new book that highlights the story as he built a $45 billion global company from just $8 in his pocket. Not a bad ROI. Let's get more on this from the author himself. We're joined by David Thomas, author of The Fairfax Way. David, thanks very much for joining us. I'm just going to show the book here while we do this.
Morning.
There it is, right there. Get it there in the light. There you go.
Book released today, yeah.
I guess to say impressive is an understatement.
Of the book, have you read it already?
I had it. No, I had a chance. I looked through it. I didn't read all the chapters, but the book is magnificent, Shakespearean.
Yeah, I mean, you look. I think a couple of numbers tell the story. They've been running for. In fact, they just celebrated their 40th year last month as a public company. But if you look at the numbers just to the end of December, we're looking at 21% compound annual return. The comparables are 11 and change for the S&P and about 8% for the Canadian market. So yeah, impressive is a good word.
And he's still going strong. Now in the book, he's called a combination Warren Buffett and Howard Hughes. That is quite the combination.
When I started it, I thought I was going to sort of rule out that misconception, because a lot of people called him the Warren Buffett of Canada. I don't think he really loves it because he's not trying to be anybody other than himself. But the model is there in terms of building a holding company for the long term in a decentralized way with a big engine of it is insurance companies on one side. They have float. So they take money in and they hold on to it because they have to pay out returns. But hopefully they won't have to pay them all out. But more importantly, over time, as they hold on to that money, if you're a good investor and not just sitting in 2%, if you're smart and can make good bets, you can make a lot of extra money. You're basically getting free leverage. So that's the model where you look at Warren Buffett. Prem had a really good record calling the market. Warren's obviously got a great record. And so there are similarities, but Prem's model is global. Warren always stuck to the U.S. Much more diversified for Fairfax. So there are some similarities and some big differences.
I guess Prem Watsa, obviously a big name during my career. There were also times where some controversy, right? Like his name was in the media for some controversial times and some questions. How was that? I guess you touched on that in the book as well, I assume.
Yeah, there's a couple of things. So there's always this gap between if people even know them at all. And do people pay that much attention to an insurance holding company anyway? It's not the sexiest sector, but for a long time they were golden. They were the market darling. This is the 1990s. They were buying companies. They were building up, and I think people didn't understand it because suddenly at the end of the 90s. They pretty much stopped. They made a couple of more acquisitions, but they had done their building, and then they needed to fix and polish those assets and then grow organically, which is a lot cheaper. It's a smarter way to do it, but they had to buy those companies first. But I think a lot of people, a couple of things went wrong. So in terms of how they went from the market darling to a bit of a pariah was those assets that they bought. A lot of them weren't in great shape. So they were buying insurers using a value mindset where they bought companies that were cheap, but for a reason, right? And I think they underestimated how long a lot of those companies could backfire. When you have, you buy these companies, but they've got all these policies that they've written in the past, and if there's a toxic long tail potentially, and things like asbestos and a lot of other things. So what happens is they might be generating cash, but they're under reserved, and every year you have to shovel a huge pile of your earnings into these companies, and they become a real drain. And you can never do it unless you're going to write stuff off. And Prem never wanted to write companies off. He didn't want to lay people off. He was in it for the long term, and he wanted to fix them, but they took a long, long time to fix. So I think what you're talking about is, people losing interest, right, a little bit in the 2010s, there's a lot of good things that happened. They made some market calls that were outstanding. He was really smart at making some bearish calls. The Big Short, they made out probably better than anyone. But they stayed. Here's another thing, just sort of going past into the 2010s, is they stayed bearish. So you had a period post financial crash where we were entering deflation. The aftershocks were killing the economy. You saw quantitative easing, and as well as qualitative. Interest rates were down to zero. It was a really tough environment, and they were worried about their capital. So they started shorting the market again, and it paid off in spades in the 2000 tech wreck. It paid off again with the great financial crisis. But the disaster never came. The central banks really bailed things out. And meanwhile, they spent a fortune. They lost billions of dollars over a number of years paying for all those hedges and shorts. And the disaster never came. So they decided there's a smarter way. They kind of gave up on just raw bets, and they started investing in themselves, more.
I just want to get in one last quick question. One of the things I did have a chance to read through the book, like brushing through, but one of the things that struck me, I think he owned his mistakes a lot, it feels like. When something went wrong, he said he laid it out. How important was that for his success?
Well, that was just the way he wanted to operate from the get-go. And I think if you take the time to read the letter, which started at a page and now runs up into the 30s, it's one of the best letters out there, along with Warren Buffett's. And the first thing they do is explain in detail all the things that went wrong. So, there was never an attempt to sort of polish it over.
Okay. David, thank you very much for joining us today.
Thank you.
All right. David Thomas is the author of The Fairfax Way, about Prem Watsa.